Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we'll be looking at inventory on the cash flow statement. As we do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition, and then we'll go on to look at some examples and give you a little more insight. Inventory is the raw materials, work in process goods, and or completely finished goods, which are considered to be the portion of a business assets which are ready or will be ready for sale. Inventory represents one of the most important assets most businesses possess because the turnover of inventory can be one of the primary sources of revenue generation for a business. For this example, we'll be looking at Walmart Stores Incorporated, starting of course with the cash flow statement, and you'll be looking under the operating activities at one of the assets here, noted as inventories here, and we'll be looking at the change in the inventories, precisely this figure here, and we'll get this figure from the balance sheet. So let's quickly go right quick to the balance sheet and see what we're looking at here. Alright, scroll on down. Okay, we have inventory right here, and you can see it's $40.7 billion. And what we're doing here is we're comparing it to the previous period. In this particular case, we're looking at $36.4 billion to now the current 12 months, we've increased it to $40.7. Now remember, when we're looking at the cash flow statement, we are interested in knowing whether cash flowed in or out of a business. And in this particular case, when we're looking at inventory, we know that if we've had an increase from $36.4 billion to $40.7 billion inventory, the only way that can happen is that the company took cash and spent it to purchase more inventory. And that would, of course, show up as a negative figure on the cash flow statement because cash was flowing out. So remember that if you've ever got a case where you're looking at inventory on the balance sheet and it's gone from 36, or not from 36, but if it goes from one number to a larger number the next period, then you know that's going to end up on a negative number on the cash flow statement. If in the event it were to go from one period here to say this was 36 and this goes here to 32, we've obviously seen a decrease there in inventory, then we would give the exact opposite on the cash flow statement. So if we go back to the cash flow statement, scroll on down here, we have inventories here, 37 right here, so you know that because you've had $3.7 billion has been decreased, and we know that it has increased in the inventory section on the balance sheet by that amount. Quick little example of the other scenario. If you look over here from the inventory section here, and you see that a couple of years back you had $2.2 billion, and that was added to the cash flow statement, showing it's a positive number on the cash flow statement. They're adding it back to net income. They did that because in that particular time period, what you saw in inventories was a decrease from the previous period. So what was happening there is that if inventory actually decreases, then you know that you have sold a bunch of inventory, and in order to do that, you sold it and acquired cash for it. So therefore, they're seeing that as a positive number on the cash flow statement in those cases. Last but not least, just to remind you, as the actual definition was referring to, whenever you're looking at inventories, it's very important for companies because in most cases, the inventory of a company is how the majority of their revenue will be generated. And you can see from the basic numbers here, you've got $3.7 billion versus it's actually one of the largest items, other than the actual depreciation figure or the change in liabilities, which is multiple items here. So this is a substantial method of generating money for a company, is whenever they can turn that inventory. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.